And hello again, everyone. Welcome to another edition of Frazier Deeter's Business Beat. I'm John Ray alongside Roger Lusby. Roger.
Good morning, John. It's great to be back at Bank of Renaissance.
It's great to be back where we belong,
That's
right?
right, back in the old headquarters.
Yeah, we've been vagabonds here for a few months, but we're back and excited about it. And we've got a great guest today. And thank you for bringing in John Marsh.
We do. I've known John for a long, long time, and he actually started with us at Frazier Deeter and now has moved on to bigger and better things.
Yeah,
John, welcome.
Thanks, Roger. I'm glad to be here. It's nice to be with you again. It's been a long road to come to where we are today, but I'm glad we've stayed in touch for sure.
So, John, you are managing partner with the Bristol Group. Give everyone a little introduction to you and how you're serving folks out there.
Yeah, no, thanks. And again, thank you for having me, John. It's nice to be here. It's crazy that we're actually face to face. You know, we've been doing these things over Zoom for so long, but yeah, so I'm managing partner at the Bristol Group. We're a boutique M&A advisory business brokerage firm. As Roger alluded to, I call myself a recovering accountant. Came out of the University of Georgia, started at E&Y for 2 years, found Frazier Deeter, which was a great firm, spent some time there, and really loved that life. I love seeing clients. I love seeing a lot of different clients, but I quickly realized that that's not what I wanted to do long term. So Roger was kind enough to help me through that journey and took a job as controller, then CFO, interim CFO at a medical device company here in Marietta. We grew that from 12 million in revenue to 80 million. Had a lot of fun there, learned a lot of things. And we sold that to private equity.
Big transaction.
It was a very big transaction. I was glad to be a part of that team. I learned a lot. And when that ride was over, I stayed on for 2 years, with a new acquirer. And really decided that I wanted to do something for myself and looked at buying a business. I thought, I think I want to realize the American dream and buy a business. Quickly realized through that process that lower middle market businesses in Metro Atlanta were underserved by quality and professional brokers. So kind of landed on that. After looking to buy a business, I decided that I could continue serving clients as a business broker, M&A advisor. So started this a couple of years ago. I'm an affiliate of the larger Bristol Group with 17 of us around the country. So definitely like what I'm doing now and thankful for my experience at E&Y, Frazier Deeter, and Amendia to kind of help me serve clients today.
Yeah, absolutely. But tell us a little bit, John, about the just the overall environment here with mergers and acquisitions and transactions, and then maybe address the new administration we have and Biden.
Yeah.
And, we see maybe, at least with our client base, an acceleration of deals.
That's absolutely right. We're seeing that those capital gains, likely increases that are coming, are absolutely driving the timeline forward for those folks who may have been considering an exit in the next 3 to 5 years. As you know better than anyone here in the room, that impact to small business owners is extremely large. That increased capital gains tax is driving folks forward in their process. So back in 2020, we saw a crazy time, of course. So I spent a couple months in the fetal position figuring out what the heck was going on and how the government was, what the government programs meant. But in Q3, Q4, we started to see deals start ramping up. We started to see activity increase, and we're continuing to see that in 2021. So it's a great time. It's a great time to go to market, especially if you've got a sellable business in certain, industries, and we can talk more about that. But yeah, tremendous time to sell a business, and it's being accelerated by the likely
and then
increase.
all this was done under the guise of the COVID pandemic. And of course, some industries were suffering mightily, and then other industries, other clients have done better than they've ever done. And so it's been remarkable what the impact has been.
Absolutely. And we have tough conversations sometimes. We deal at the Bristol Group in sellable businesses. We don't deal in distressed businesses. And overnight, businesses change from being successful to struggling and in some cases, just not being able to be sold or even continue to stay in business. And that's tough. But, it's interesting to see the impact and how entrepreneurs have adjusted and changed their business model in some situations. But yeah, to your point, some industries are just booming right now.
Yeah, and of course, the one thing that has stayed high has been valuations. I mean, the stock market has stayed extremely high. We just had new highs yesterday. You've got SPACs now that are out there gobbling up private companies, which is a totally new and interesting model for companies that are private to, quote, immediately be public. And so that is interesting as well.
Absolutely. I had a client ask me the other day if I knew anything about NFTs. And I said, yeah, I know what they stand for. So the special purpose acquisition companies, we don't see a whole lot of that in the space that I'm in. We focus on enterprise value between $1 million and $35 million. We've done deals as high as $100 million at the Bristol Group, but we're not going to be your Main Street business brokers. Point is, those SPACs are not necessarily at my level. They're
correct,
not
correct. But it still impacts the entire market.
Oh, for sure,
if you will,
for sure.
And then, of course, we do know that there's a lot of cash on the sidelines looking for good quality businesses. Businesses that have strong EBITDA.
Yeah. To that point, Roger, I took a fire protection life safety company to market in January of this year. They tried to sell a couple of years ago on their own, and confidentiality was breached. They weren't able to focus on the business, so they decided to engage an intermediary like me. We took I do for my clients a broker's opinion of value that shows the most probable sales price in the company. I'm able to leverage those E&Y, Frazier Deeter skills to recast financials and go pull multiples. Valued the business at $3.5 million. Based on my research, I saw that private equity strategics were coming downstream because they had capital to deploy. So we didn't put a price on the business. We got offers at $5.1 million, 9 total offers, 3 at $5.1 million. They turned into stock deals without any asset treatment. So it was a tremendous opportunity. Now, granted, that's a specific sector, right? Life science, fire safety. There was strategics who were looking for bolt-ons. And so that's not going to happen for every client. But to your point, money is coming downstream, and they're really going after these other strategic acquisitions, and they're overpaying for them. And I don't want to tell all my clients that because it's not going to happen for everybody, but that's our job, to build a market, go market the business. And we're seeing that pay off for sure. It's really interesting.
Well, I mean, in the low interest rate environment that we're in, that's one of the reasons for that. We've seen an increase in multiples there with EBITDA. So what are the drivers that you're looking for in the clients that are in your market, John?
Yeah, there are a number of things, as you know, right? But clean books and records is the first thing, right? If they're going to give me a financial statement that I can understand, doesn't have any balance sheet items, a good test for me is, how did you record the PPP? If you got PPP money, how did you record? And if they recorded it as revenue, we're going to have a conversation. So clean books and records, owner's involvement. How heavily involved is the owner? Are they I've got a plumbing company right now. He's got 19 technicians. He's not going out and servicing customers. But if he had 2-3 technicians and he's out working 45 hours a week in the field, that's not likely a sellable business. So owner's involvement, revenue concentration or customer concentration, reoccurrence of revenue, the contracts. Do you have contracted revenue? So all of those things kind of play into the range of value for the business. But those are some of the things we ask about right at the beginning. Clean books and records. What are you doing day to day as an owner? What's your revenue contracting or reoccurrence of revenue look like? How's it contracted? Those type things.
Yeah, because even for some of these smaller businesses, if they can just have some financial statements, even if they were compiled but with footnotes, that would be very, very important to them. Yeah. And especially if they're going to plan to sell, it'd be nice to have at least 2 years of financial statements and then good tax returns that match the financial statements.
Yeah, so important. And I'm adamant about business owners being prepared to sell well in advance. Don't wait until 6 or 9 months before you're ready, because it takes 6 to 9 months to sell a business. And that doesn't even count hey, are you building a preliminary diligence room? Do you have all your contracts? Do you have everything documented? So, prepare early, prepare often, even if you're not going to exit in the next, year. So, yeah, absolutely. Get those financials in order. Call Frazier and Deeter and get somebody in there to help you get your house in order, because that's so important.
And when you're working with these deals, what are the biggest issues that you run into? And then I'll share with you some of the bigger issues that we run into as the accounting firm for an M&A transaction.
Would love to hear that. I try to set my expectations for my client at the beginning of the engagement. This is not going to be a seamless process. You're not going to get, some folks come to me and say, I'd really like an all cash offer. Well, I'd like to win the lottery too, but I'm not counting on that, right? It's not likely. And then the emotions and diligence and during due diligence, I am the one who's talking to the acquirer. I'm talking to the acquirer's attorney. I'm talking to the acquirer's accountant. So I'm able to filter some of that. So the emotional ups and downs in a deal can really, number one, build distrust between the seller and the buyer and can cause a deal to go south. So that's something we see. And then obviously, undisclosed issues that come up in diligence can really also determine, create a lack of trust between the entities. So I like to get the good, the bad, and the ugly out during the marketing process, during due diligence, pre-LOI, actually. So those are some of the things that we try to do to mitigate a deal going south.
Yeah, because we're seeing with a lot of the deals we're working with, the reps and warrants are just getting to be exhausting list. Very, 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 very intense now with what they want. Certainly PPP loans have been something that probably needs to be escrowed in a lot of the deals. Yeah. State income tax issues and state sales and use tax issues are big. And whether we had that nexus and whether we should have been filing in various states, right. And who does that liability ultimately rest with? Deal structure is certainly important, whether we've got a stock deal, an asset deal, thereof. But a couple of the other things that I think people don't recognize is that if their business does have contracts, what are the details of those contracts, and does a change in ownership suddenly mean that I've got to get the contract re-signed?
Right.
And if it is, then that can be necessitate or drive a deal to be a stock deal so that the assets are not changing. And then the other thing is that key employees. A lot of companies have key employees, but they don't have them locked up with a key employee contract. Yeah. And so once the key employee finds out that the company is being marketed or possibly sold, they either have a greater sense of their worth, especially if they have to stay in the deal.
Right.
And so that can be important to have those folks locked up.
It's so important, especially in those service-based businesses. Mm-hmm. I'm representing a marketing company now. And two of the issues you just talked about are present there. And one, they've got a very large government contract. So we're currently with their counsel, making sure that, understanding the implications of a change of control on that contract, because it's significant. It's an $8 million a year contract. So that's important. And then, what do their key employees look like? Who are they, number one? And number two, are they going to stay post-acquisition? And if they go, what's the risk to the go-forward entity? What's going to happen to those client relationships? So, it's important that, to your point again, get those key employees under non-solicitation at a minimum so that they can't take your customers. There's no risk of that. But then also in some of these service-based businesses, who does the license stay with? I've got the fire protection company I just mentioned. It's important that more than just one key employee holds that license, because if they go, your license is gone. Same with this plumbing company I'm representing. So employee issues, as you mentioned, are so important, and you got to get your arms around those at the very beginning.
Folks, we're chatting with John Marsh. John is managing director with the Bristol Group. John, I would imagine, you've obviously got a lot of financial aspects to your role, but I would imagine you're part-time psychologist in a way, right? Because you really have to talk business owners through what the reality is of the business they own and what buyers are willing to pay and where they're going to run into a buzzsaw, as Roger mentioned, with that buyer looking for reps and warranties or looking to try to discount in any way they can the value of an offer.
Yeah. Well, my wife is a psychologist, so she hears a lot of the issues that I deal with. And but you're right. You do have to set those expectations on the front end. Let the buyer, or excuse me, your clients, the sellers, we're sell side representatives exclusively. Let our clients know that this is a roller coaster ride. It takes between 9 and 12 months. You will have periods of extreme activity. Then you might not hear from me for a week or two. And that's just part of the process. And it is emotional. One of the things I do is that broker's opinion of value. And I don't try to mess with that. I'm not going to try to get a listing or get a client by inflating that broker's opinion of value, because we're success fee based. I'm never going to sell it, never going to make any money on it. So it's not important, or it's not my model. So telling clients that their baby is ugly, that the business they've been working on for many years is not worth what they think it's worth, that country club valuation, we call it. Their golfing buddies sold their company for $20 million, and I can do that too. That's a hard conversation. And we've had to, we talk among the 17 Bristol Group affiliates on how we deliver that news, because it is sensitive. These folks, these clients and entrepreneurs have been working on the business for so many years. And then again, to your point, John, when you're in the negotiation with the potential buyer and the buyer starts throwing shade or, saying, hey, here's why the business isn't worth what you guys think it's worth. I'm not going to tell my client all of that, because they're going to get upset and it's going to cause their emotions to go. So yeah, emotional intelligence is important here. I'm not saying I'm perfect at it, but thank God my wife's a psychologist, because I get to ask her about it. Luckily she works for free. But yeah, no, it's an emotional process and navigating that and having a partner. I'm not the only good broker in town, but having a good partner, good accounting firm, good lawyer to help you navigate this, because it's not easy. It's very emotional. Having those partners is very important.
Yeah. And then of course, with a lot of the deals, the owner may be staying for a period of time. I'm assuming that most of the deals that you're working with, it's 100% transaction.
Yeah, most of them are, for sure. I've got a couple deals that are, one's 25 million, one's 30 million. We'll expect that the seller will get a second bite, so we'll retain some go forward equity. It'll be less than 20%. But we don't do minority recapitalizations. Right. But yeah, the owner is going to be involved for some period. I've got an anecdote for every situation, because we have a lot of conversations. But there are some clients who say, hey, I'll transition the business for 30 days and then I'm out. Well, that's not going to work for most acquirers unless they're strategic and they can quickly fold your business into theirs. It takes more than 30 days to transition a business successfully. And if you've got a buyer who's going to pay you multiple millions of dollars for your business, you should be willing to stick around for some time to make sure that goes well. Doesn't mean you're going to work for free, but you can't it's not like selling a house. You can't move your furniture out and be gone. But yeah, client involvement or the seller's involvement go forward. We see a lot of different things, but you're right, on those bigger deals, they're going to stick around for a longer time.
Yeah. And of course, non-competes will be there, and consulting agreements may be there.
Yeah. Yeah. And we see, what are you seeing in your deals for non-competes? I've seen one as large as 5 years. And it depends on, that situation. The client is of retirement age. They're going to go fishing and hunting. But
yeah, it really depends on how specific it is. If it's really, really specific, they can go a longer term, but we probably see more 2 years. Yeah. With more of a general non-compete, non-solicit type agreement.
Got it. Yep, that makes sense. That's part of the reason we're out there. Again, fire protection deal. I keep bringing that one up, but they service sprinkler systems. Well, my client has a separate entity that services fire hydrants. He's not going to sign a non-compete. He wants to continue to do that fire hydrant work. So we outline that at the beginning. We put that in the SIM document so that we can avoid those. He's happy to sign a non-compete for 40 years on the sprinkler system, but he's not going to sign a non-compete for a day on the hydrant business. So those are the kind of things that we have to work with.
And it's also important for him to know what he wants to do.
Right. Exactly. Yeah. no one's going to pay you a whole bunch of money to buy your business, and then you can open up shop next door. And start it again.
I agree.
Not going to happen.
John, what are you seeing in terms of, we talked about some industries are doing well, some sectors are doing poorly. Obviously, hospitality and travel related industries are one of those, of the latter. What are the particular industries where you're seeing buyer demand for?
And we see a lot of different things because we're generalists with 17 brokers around the country. Some of us have niches, others, don't, or generalists. So we talk every week and we're sharing ideas. So, B2B service-based companies are doing well right now, especially in those essential services, HVAC, plumbing. Those are important businesses, and folks still need their faucets fixed. Those businesses that are serving life sciences or healthcare are doing well. Medical billing companies are an example. Those are doing well. We're seeing a lot of telehealth. SaaS-based businesses are really in demand, and we're seeing multiples based on revenue in that space, not EBITDA, not seller's discretionary earnings. So those businesses are doing well, and those are actually interesting because they don't necessarily have to be profitable. It's based on the number of users and the monthly or annual reoccurring revenue. But B2B service-based businesses are doing very well in this space. We're also seeing marketing agencies doing well, landscaping businesses doing well. So there's a wide variety of industries. But to your point, I took a client on who has a great solution for travel, and I took him on in January 2020. And God bless him. It's been a long road for his business and for us marketing the business, but we're in it for the long run. So hopefully things change and we'll be able to get him a deal. But yeah, to your point, John, those businesses have been dramatically impacted.
But again, even if you're in an industry where there's a lot of demand for your particular type of business, you can be disappointed if you don't have your books in order, if you don't have some of the factors that you talk about that create that opportunity really for a potential buyer to demand a discount because of this risk that they see in your business.
Right. And businesses trade at a range in value. For this example, let's call it 5 to 7 times. And how do you get to that 7 times? How do you get to be that best in class type of company? And it's important to have a team to help you through that plan for this exit long before. Hire a coach, hire an accountant, talk to me. Let me do a broker's opinion of value for it. We'll update it annually so that you can see how the market's changing. You can also see how increased revenue, increased EBITDA can impact the valuation. So valuations art and science, right? There's some of those where we're using a lot of judgment when we're using, the buyer's test methodology. But there are others that's pretty cut and dry. Here's the multiple for your business. But how do you get to that higher range multiple? And we talked about some of those things. Roger, I'd love to hear your thoughts on this, but client concentration, contracted revenue, owners, involvement in the business, trends. In other words, have you been profitable for a number of years? Are you growing steadily at a steady pace? What are you seeing as far as those best in class companies?
Well, they're all important, but I think for companies to get that real premium, there's got to be something there that's special. And then usually what that is that's a contract, or that's some talent, or it's a location. In other words, it's a synergistic acquisition, but maybe they're in a location or a region that company's not in.
That's right.
And that they can be the base and grow from there.
Yeah.
And then from the company standpoint, a lot of times it's that they can have a partner that's got capital and maybe more talent and can help drive a lot of those things.
Yeah, exactly. That's exactly right.
Folks, we were chatting with John Marsh. John is a managing director with the Bristol Group. John, so if I'm a smart business owner, I'm really looking for somebody that's going to shoot it to me straight and help me out and tell me the truth about what my business is worth and walk me through the process that you talked about. So, if I'm business owner, I'm looking for a good business broker, and I haven't found you yet, what should I be looking for? I mean, how should I judge that? Right, that somebody's going to tell me what I need to hear.
Yeah, that's a good question. I don't know if I know the exact answer to that, but I'll tell you what I'm seeing from these folks who have successful businesses is they start planning early. Earlier this year in January, I went through the CEPA program, Certified Exit Planning Advisor program with the Exit Planning Institute. And what I saw and heard from those professionals is that it takes a team. You need a person like Roger Lusby. You need a good CPA. You need a wealth manager. You need an attorney. It's not just a broker or a CPA, it's the team that brings it together. So what I find these business owners who are doing well and ready for a good exit is they've been planning for this years in advance. They've been talking to the Roger Lusbys of the world. They've been talking to the John Rays of the world. And during that exit planning CEPA program, they talk about every 90 days you need to ask yourself, grow or exit. And you need to be thinking about these things. Even if you're not ready for an exit for 5 years, think about what does it take for me to get to that place. And I think having advisors on your team who are experienced, who have been there, done that, and who have the courage to tell you the truth is important. So, we're not going to tell you things are all rosy. Me take a listing and then 2 years down the road, I haven't done anything for you because that's a waste of my time and your time. So my goal is to be a trusted advisor. I feel called to help these business owners, and I feel like they need the help. I feel like lower middle market businesses can benefit from quality and professional advice, whether that's from brokers or CPAs.
But my experience is if the owners understand what's driving the value, so in other words, they've had an internal valuation done, maybe by our firm, maybe by somebody else, maybe it's a broker's opinion from John, but they see what the key drivers are. And then from their industry groups, what are the drivers there? And then that's where their focus should be if they're looking for an exit. Because if I'm in an industry that is selling on a multiple of revenues, then top line ought to be what my emphasis is. Right. If I'm in an industry like most of them that is selling on a multiple of EBITDA, then profits become more and more important, and I got to focus on that. And that's what they ought to be looking at, is what are the key drivers for their company and for their industry. And if they don't know that, the best way to get that is to get a valuation or valuation opinion done.
And I love those calls when I speak to a prospect and I say, do you have any idea what you think the company is worth? And they've either engaged, a certified valuation CVA type person, or they've looked at multiples in their industry and they're realistic multiples, right? They're not out there saying, oh, I'm a plumbing company and I'm trading at 7 times revenue. Well, that's not true, right? So those that have their finger on the pulse, and to your point, Roger, who've done the valuation work, who have planned, I love those phone calls because those entrepreneurs and business owners are going to be easier to work with because they're prepared, they're planned, they've got the documents that they need, they've recorded their minutes. They've got the bylaws. They've got their share certificates. They've got reviewed or audited or even compiled financial statements from a reputable CPA firm. That's so important.
So we know that a business owner needs to have a guy like Roger and other professionals, like you mentioned, along the way, just to manage their business properly, really. But let's talk about when a business owner should engage you. I mean, as they look ahead, they think they've got everything right with their business in terms of the financials, their taxes, what have you, and their planning. When should they bring you in based on what their timeline is to sell a business?
Yeah, and I've mentioned it a couple of times. I truly believe in trust before your transaction. So let's get to know each other. Let me do a broker's opinion of value, or just talk through the challenges that you're facing, what I'm seeing in the market 3 to 5 years before you're ready to exit. Don't wait. I have folks who come back and say, call me in 3 months. I'll be ready to sell then. Well, it doesn't happen that quick. Again, the house analogy, it's not the same thing. So 3 to 5 years out and is the ideal time to start to call me. I'm happy to give you some advice. I'm success fee based, so I'm not going to charge you anything for that. I make a commission only at the closing table. But start planning before. I'm passionate that you need to be ready as a business owner to take the money and the value out of your business that 80% of business owners' net worth is tied up in their business.
Agreed.
So, and it's not something you can go trade on Robinhood or something like that. You've got to come and be ready for a plan.
And then if you're really looking to retire, you probably have to give a year, because you may have to stay a year with the deal. So you've got to factor that in as well.
That's right.
Tell me about the other asset, real estate and leases, and how that impacts some of your deals.
That's a great question. Georgia's a unique, there are about half of the states that require business brokers to have real estate licenses. So I do have a real estate license. I am not a real estate expert. So I partner with commercial real estate agents to make sure that goes well, or an attorney to make, who's focused on real estate. But we say two things kill deals. And to my attorney friends, I apologize, but attorneys and landlords kill deals. So to your point earlier about the change of control provision in the lease, I had a call in the parking lot before I walked in here with a gentleman who said, "Hey, I'm ready to sell, but my landlord, I'm on a month-to-month lease. He's asking me to sign a 5-year lease. Should I do that?" And heck no, don't sign a 5-year lease when you're ready to go to market. So real estate is when there's real estate attached to the deal, that can sometimes help, especially when it's a logistics company or something that relies upon that real estate. So I'm rambling a little bit.
But if it's real estate that's owned, that hopefully is sitting in a separate LLC.
That's right. And
that can either be part of the deal or not.
Yep.
Or they just become the landlord if the new owner would decide to sign a lease. That's right. And so that's why we like to usually separate that from the active operating business.
Absolutely. And our goal as intermediaries is to help our clients secure a long-term lease at closing so that they can rely on that residual income and have a tenant in their space.
Yeah, assuming that they're not looking to pick it up and move it.
Right. Exactly. Yeah. Exactly.
Well, John, this has been great. It's been great to have you on and to give us a sense of what's going on in the market out there. I know a lot of folks are going to be interested in this. And we haven't gotten to the most important question, which is for those that would like to be in touch, dive a little deeper in terms of their own business and ask you questions. How can they do that? Yeah, no, I appreciate that. And real quick, John, it's nice to meet you face to face. We've been COVID friends, and Roger Lusby and his brother Tim have been mentors of mine for many years. So I'm honored to be a part of this, and thank you for having me on, Roger.
Well, you did a great job, and we were glad to have you.
Well, thanks.
But give them that information, John.
Yeah, it's you can go to the Bristol Group online, so bristolgrouponline.com. You can email me at jmarsh@bristolgroup.atl.com, or you can always call me on my phones, 404-436-1071. John Marsh, folks, with the Bristol Group. John, it's been a pleasure. Yeah, thank you both. Folks, just a quick reminder that this show is brought to you by Frazier Deeter, the Alpharetta office of Frazier Deeter. And Frazier Deeter, the firm itself is one of the fastest growing accounting and advisory firms in the U.S. because they believe in serving the emerging needs of their clients as they evolve. They serve clients from the global Fortune 1000 to growing private businesses by accounting for today while advising for the future. And by the way, they believe in investing in relationships, right, Roger? We do. Thank you, John. Absolutely. And these are certainly two of them. Yeah. Well, folks, if you need more information and the coordinates for Frazier Deeter, go to FrazierDeeter.com. Roger, another great show. Well, thank you. And John, thank you so much for being our guest. Yeah, appreciate the opportunity. Thank you both. Thanks. And folks, we look forward to seeing you next time on Frazier Deeter's Business Beat.